All right, so in today's video, we're going to take a look at how to do the wheel strategy on Tesla. It's a pretty popular stock. It's pretty big. There's a lot of options contracts traded, and there's a lot of things you can do with the wheel strategy. Unfortunately, the big downside with doing the wheel strategy on Tesla is it's a little pricey for some people. The stock is more expensive, so when you're dealing with 100 shares, it can already be a little more expensive for some. Now, one of the reasons we're covering the wheel strategy is we've just recently released the Wheel Strategy Profits course. So you can take a look at that on our website. Just go to tradersfly.com, scroll down. There's a lot of great knowledge and information there, along with great freebies that you could take a look at and download absolutely for free. All right, let's kick things off. We're going to go to the wheel strategy, and in order to do the wheel strategy on Tesla, we are going to need to either sell a put or buy 100 shares, and then we will sell a call against it. Now, the wheel strategy, what it does is we try to buy the stock and then sell the call above it. That's kind of the basics. You buy the stock and then you sell it at a higher price. And if it doesn't reach that price, you get to keep the premium that you've collected for waiting to kind of for pre-selling the stock or the information. Now, we could also just sell the put to try and acquire the shares. So if we look at Tesla right now, let's look at the chart. We're going to go to the daily, and I will show you what we've got. The stock is a little bit high, okay? So the stock's a little bit at the higher end, at the maybe 280. It's been going up. Now, I don't know if it'll bounce and keep going higher, but, it's been around that level. Down here at the 210, seems like a better deal. So depending on your levels and where you believe the stock will go, if it's been running up recently, you may say, you know what, the stock's a little bit at a higher price. So what I'm going to do is I'm going to try to pick it up. Well, where's a good deal? Maybe we'll start with selling the put. By selling a put, you're saying, hey, put that stock to me at about a 230, 240, 220 level, depending on where you want it. So let's say I want that stock. I'm going to go about 18 days out because I think, hey, maybe in the next couple of weeks, we'll go to that level. And we can say, around 240, give me that stock, or around 230, give me that stock. So if I do that, that means they will pay me $157, meaning I'm selling this contract and somebody's paying me, and I'm getting $157 for waiting for that stock to get assigned to me. Now, if it breaks below the 230, that's where our strike is. If it goes below that, I will get the stock at 230. So if it gets to 220, I buy at 230. Gets to 210, I buy at 230. So that's the way that it works and operates. So I'm going to do that and execute the trade. But for waiting, I get to collect $157. Okay, so I will send that order in, and now we will have a put that's there. Now, the other approach to doing the wheel strategy is to actually just buy the shares to start out with. See, right now I don't have shares, so I'm waiting for the put to go. But choice number two is to buy the 100 shares and just buy them immediately. And I could just buy the 100 shares immediately. That means I'm buying them at 266, about 17 cents. And I can buy them immediately, and we will do that right now. And then once you buy them, what you're going to do is you're going to try to pre-sell them. In other words, that's what you're going to do with the call, is you're saying, hey, I'm willing to sell those shares at a higher price. And I could do that, let's say 11 days out. So now I can go to the 11 days, open that up. And since I bought them around 266, what I can do now is sell them at maybe 280. So I'll sell that, and we can analyze the trade if you like. For that, I'll collect 335. So if the stock heads higher to 280 from the current price of 266, I will go ahead and profit from the price of the stock going to that level on top of making the $335 of that from waiting or for the call option that I sell. So in total, I would make right here, 1720 is what it says right down here. If you look at that level right down in that zone, it says 1720. So I'll make in total 1720. And the way that this works is, since I bought the stock at the purchase price of 266.15, and then I sell it at 280, so I make a certain amount from there. Plus, I also make the 300 and let's see, is it the 335? Yeah, 335. So that's the way that it would work, and that's where you get the total of about 1720. So if you take the handy dandy calculator out and you do this math, so get it at 266.15 and I sell it at 280. Okay, that means it's a $13.85 move times 100 shares. So you would profit 1,385. Okay, now we will add 1,385. I'm just going to do a minus because I'm in the minus section. Then I'll add the 335 to it, and then that's where the 1720 would be. So you take the difference, the stock where you bought it to where the stock where it's where you sell it. That is a certain profit, and then you add the amount you'd make on top of that. So we can sell that call as well against it. So now I've got double positions going in this situation. I've got a put contract here that we are waiting for, and we'll pick up another 100 shares if it gets down to 230 or lower there. And then this covered call that we bought 100 shares of stock, and if it heads higher, I will collect 1720 from that position. So that's the basics behind setting up a covered call on Tesla, and on top of doing the wheel strategy. So you could approach it from one of those two ways. You could start it out with a put saying, hey, put that stock to me if it heads lower. But if it doesn't get there, you collect the $158 of premium. Or the other approach is just buy the 100 shares right away and then sell the call against it where you believe that stock will go to, and then you're willing to sell those shares at a higher price. But if it doesn't get there, by waiting, you get to collect the premium. So that's the cool part about doing the wheel strategy, is you get to profit here from one way or the other in working these trades and working this operation. So I hope that helps. Truly appreciate you sticking with me and joining me and watching this video. Feel free to check out that course. It doesn't last long, so if you're interested in getting it, check it out, Wheel Strategy Profits course on our website at tradersfly.com. Thanks for joining me, and I will see you in the next video. Take care.